Okay, good morning, everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, February 2nd. Good to be with you guys this morning. Eileen says, good morning, Michael. Thanks for sending over some of your snow to the Rockies. Cheers. Yeah, it looks like I might be out of the season for the rest of the season for skiing. I had a little injury last week, but we'll see if we can get back on the slopes hopefully soon. Mustafa, great to see you. Hussein, Mark, Gary, cheers. Great to see you guys here. Timothy, as always, a pleasure, man. So let's jump right into things. It's Aussie Mania in my head, just in case if you haven't noticed by the retail or the intraday reports, rather. Um, it's really been all about the Aussie for me and the Aussie crosses. So last night, the RBA came out. It was a beautiful play. I tried to point you in the right direction on the radar charts. These are still the four major trades that I've been involved in. Last night, really, mostly was the Euro Aus. I took a quick scalp on that one. Aussie dollar coming off resistance. Aussie Swiss looks like it made a break of the weekly opening range. Aussie Yen, same deal. And it was a real clear-cut play because you saw the RBA come out, and basically all they said was, there's further scope for easing, and inflation likely stay low for the next year or two, right? You saw the Aussie rocket on that data. Obviously, that makes no sense. We weren't expecting an interest rate cut, but it's not like there was anything in there that was hawkish, right? So, long story short, you saw the immediate reaction push the Aussie higher, and that was the ideal opportunity to try to fade the move. So we'll look at some of those trades. As always, guys, feel free to throw out any setups or specific pairs you want to review. I do want to take a look at oil and current price action. Gold testing the highs. We want to talk about that as well. Euro pound also setting a very clear weekly opening range. We'll tag that as well. All right. Eileen said, got some pips on Euro Oz. Many thanks. Cheers. Yeah, it was a beautiful play. So let's just jump right in. So here's the chart from yesterday. And, you know, the basic premise, if you remember, guys, this is the same exact levels that we looked at last week's Euro Oz chart. And the premise was we're looking for a topside break of this descending formation as it came into critical support just ahead of 53 into 53.25. Real nice confluence support zone. You have three different fibs that all lined up right there. And that's basically where we closed off last week. So this week, opening range taking place just above that. We popped through the upper median line parallel. We checked it as support. And on the back of that RBA interest rate decision, you saw exactly what happened. We came right into that. There was actually a beautiful trigger on a 5-minute and a 1-minute chart. I'll show you in a moment. That put us in the long side. Targets of 75 pips. We took a quarter off the trade at just 25 pips. I was in pretty heavy on that bounce because you also saw that momentum held 40 here, and that's exactly what you want to see. And then the rest of the trade got out at the 75 pip target. Before we jump into that chart, guys, here's what the dollar index looks like today and relative performance so far. So you can see that it's a mixed performance, broadly showing still some strength against of its majors here. Euro, yen, top performers up 0.35 and 0.27% respectively. So you can see the dollar index here. This is a 30-minute chart. Still pretty messy. I don't really like the technical structure that we're in so far. Not really too much evidence to validate that median line formation, but we'll be looking today to see how this pans out. What I wanted to show you on this is the relative performance. If we shift this to just relative performance of the Aussie against most of its major counterparts, you can see that it's weaker against all of them, save Kiwi. Okay, so Euro higher by 1.26. Biggest gainer, obviously Euro Oz, our favorite trade for the night. Yen, second biggest gainer, up 1.17. And again, dollar, just 0.91% in the green. So here's what the Aussie dollar looks like now. Okay, first things first, the daily chart. Again, you can note that 50% retracement of the decline off the highs, right, the 71 handle, and a big region of resistance, former support, now resistance, so a good area where you'd expect to see some pullback. Now, the one thing I do want to note is the pullback is now coming into near-term support, okay, 70.37. It's also the upper median line parallel for the formation that we just broke out of support test or break out of resistance, check support. So the Aussie was at resistance heading into the release. Euro Aussie, and we'll come back to the Aussie dollar in just a moment. Euro Aussie was the exact opposite, coming into key support as you were heading into that release. Okay, so Euro Oz 53 was a level that we talked about last week, a level we continue to highlight at the start of this week, 53 into 53.25. Also was a nice extension off the high laid right down there. And if we are breaking the top side here, we wanted to see this give us a little bit more of an emphasized push. Here's what the 30-minute looked like. Okay, and again, there's what we looked like last night. Hold at 40 in momentum. RBA charged a decline right into that upper median line parallel, almost to the pip. Longs against that low, you're looking for about 77 pips. The ATR has actually been growing overnight. Here's what the 5-minute looks like right now. Okay, and at this point, what I just wanted to highlight is that you're getting some divergence in momentum, right? Slight higher high in price. Oscillators making lower highs. These were a little bit more of critical momentum divergence. So there is the opportunity here for this thing to see a slight pullback. We'd still like to stay constructive. And near term, we'll want to do that above 54.50, 54.40. What's 54.40? It's the simple objective initial opening range. So take everything out of it, take all, bias out of it. It broke the range highs, came back, tested it as support, and he looked to maintain that bounce while above 54. If it does break below, no problem. This is still the bullish invalidation level, so we'll be looking for long triggers on the way down. Resistance triggers or resistance targets 55.64, 55.65 right here, a basic 38.2. More importantly, 56.60 would complete a 50% retracement of the entire decline. And one other thing I just did want to tack on right now, it's kind of popped out at me, just to see if we have any overlap here. Okay, that 100% extension, I'll just leave it there for now. And we'll leave that 1618 as well. Questions on Euro Oz before we move off? Oops. And again, there's the trade from last night. And when you're trading this event risk, guys, again, I jumped in pretty heavy on this one. So as soon as we got to 22 pips profit, I just took a little off the table. We brought up the stop to break even at that point and just let the trade play out. Now, inevitably did target that 74 pips. Last night we were showing 75 pips as a quarter daily ATR. On the way back here, was looking for re-entry, and I even drew out the resistance trigger here. Didn't trigger till early London trade, so even I have to get some sleep in. So I didn't get a chance to get that one, but that was another opportunity to get on the long side just from a risk to reward play to get that extra push right into resistance. So I still think we see some upside here. Wouldn't worry too much about 55.28. Maybe an area of which you'd start to shave some more off, but it's really 55.65 that should be the first major area of resistance. All right. Eileen says your longer term Maroon 764 on the 30-minute Euro Oz. Where did you start that? This 764? It's off the high from October. So the October high to the low that we made right here in December. Does that help, Eileen? So remember, I don't really like to get too reliant on fibs that are taking off of really emotional spike highs like this. So this is a region of resistance we've tested multiple times. Kind of gives me a little bit more concrete evidence on that. Eileen says, okay, see it. Thanks. You're welcome. So any questions on Euro Oz before we move off? This is a resistance trigger that just gave out earlier, right ahead of the webinar here too. So as far as Euro Aussie data is concerned, you're pretty much limited on Aussie data for now. Um, I guess the major next print is going to be retail sales on the 4th for the month of December. We're expected to see that hold about 0.4%. Okay, so moving right on, and the extra explanation for your reason to start fibs where you do. Good job, good, good. Cheers, Eileen. I appreciate that. You always have some great questions, and don't ever, feel reserved, guys. I'm sure there's someone else in the room that has a similar question. If you have one, feel free. So we'll continue to watch this Euro Oz. I do suspect that at some point today we get a decent pullback to offer some more opportunities to get long. Remember, now the London opening range low takes us right into 53.70 on the low side there. So just use some caution if you're going to try to chase this too high from here if you're not already holding a position. All right, next setup was on the Aussie dollar itself. So here's what Aussie looked like. Post the RBA, another one that had spiked right into the highs of the week. Let me just bring up the chart here as well. Again, that daily chart really showing basic trendline support, offering resistance, a basic 50% retracement from the decline off the highs made in December, and even more convincing, a key 100% extension off the low. We tagged that almost to the pip, guys. The high was 71.40. The actual extension is 71.36. Don't forget, right near that, also, you got that 100-day moving average at 71.41. Okay, so big zone of resistance. Now at this point, we're putting in an outside reversal candle that is typically bearish, but I don't want to get too excited while above 70.37. This is still the key near-term bullish and validation level. If we break back below this, you're likely to see a little bit more of a give back on this trade. But near term, certainly the short side that we warned of early in the week on all the Aussie crosses, it seems like it's panning out. So again, if we take a look at where we were earlier in the week, specifically for the Aussie dollar, here's what the update looked like on Sunday. And we said, hey, look, we're looking for possibly another spike into a high, but we're looking to sell a rally near term, okay? And that pullback to offer a nice opportunity to get back on the long side. This is that key support level. And certainly if price sinks sub 71.30, 71.37, again, you're likely to see a lot more give back for the Oz. So it's make it or break it time. Keep in mind, this is also the objective weekly opening range low. So aside from anything that I might think or feel or whatever, it's the weekly low. And a break below this really puts the near-term focus on the short side. So haven't taken anything on this. Here's what the 5-minute triggers look like for Aussie dollar. Again, I was really tempted, and last night it was actually a beautiful opportunity to get the same trade, that Euro Oz trade we took to the long side. Same thing here. This spiked into a high. It was an opportunity to get back on the short specifically for the Aussie dollar. My only reservation was much tighter of an ATR, 26 pips, where Euro Aussie was giving you like 75. So when you're trading event risk, it's, if you have a lot of conviction on the trade, sometimes those really larger ATR moves will give you that profit target in a much quicker time frame, and that's exactly what we got on Euro Oz. So I didn't want to double up, put all my eggs in one basket and short the Aussie dollar too. Euro Oz long is short Aussie. So we didn't play it here, but certainly the opportunity was there. Again, now you're coming into the support structure. Very cautious about getting on the short side of Aussie from here. But a break below this is really what would solidify. And at that point, we'd look to start selling rallies in Aussie dollar. Any questions on the Aussie and where we stand right now? If we were going higher, this should hold. Okay? We break back below 50 or 70.28, excuse me. Look for that correction to gather some pace a little bit lower. We've been holding this formation for this is 2.5 weeks now. So it could be a play that this thing rallies back, checks this as resistance, former support, and then breaks the lows. A pitchfork we might want to consider if price action develops further is this. And either way, if that breaks below that 70-30 zone. Even, either way, that would still shift the focus lower, breaking the median line, shifting it to the lower median line parallel. Obviously, wherever we are in time, it's going to be dependent. But you sort of get a picture of what we're looking at with the Oz. Broadly speaking, I still think the Aussie has more upside to go. It's just the immediate focus right now is on this opening range. And that's sort of the story with all of the Aussie crosses right now, guys. Even Aussie Yen, we'll take a look at that as well. That looked like it broke the opening range low. But Eileen's saying, Aussie dollar, are those long triggers happening now on the Aussie? So there's no long trigger here on the 5-minute chart, Eileen. Not on the 1-minute either. You might be looking at this trigger on the 30-minute, and that might be a trigger that is in play. And if that is, then we just broke it. We're checking it as support. And again, you'd want to see this hold 40 for the rebound. So if we do hold this low, and specifically if the opening range breaks for the US session, so as we get into 9:30, 10 o'clock, if you see that topside break, look to play the range, just back and forth. Long at the lows, short against the highs. Does that make sense? Eileen says turning up from 40. I see that also in momentum, right? Former resistance trigger break, support, could be the play. Wouldn't be surprised. I think I'm putting trend lines on RSI too steep. So one thing I always want to caution you guys, yeah, very, very important. These are just triggers, visual cues, if it were, as it were, to kind of give us the, okay, go ahead and jump into the position. But if you start to take real, extremely sharp triggers like that, yeah, they're going to be pretty disappointing. And remember, guys, as always, triggers in momentum without price movement means nothing. Just because we're getting a trigger, it doesn't mean you blindly jump into a trade. You've got to be at either a technical high or a technical low for the week against some kind of technical structure. There's going to be something you're trading against. So just keep that in mind. I thought I saw a trigger on the 1 and 5 minutes. Not on the long side. I wouldn't say this is anything here. Yeah, if you're looking at that trigger, sometimes they'll work, Eileen, but it'll be, sheer luck. If anything, this just came in, turned right ahead of support. So try not to get too granular with it. I do like the fact that we're holding 40 here on the pullback, even in the 5-minute. But all that suggests is, again, we turned ahead of 60, we turned ahead of 60. That just suggests we're likely to hold this range for a little bit longer. All right, does that make sense? Mustafa, Sterling, we'll definitely take a look at that. Let me jot it down for you. Not really a fan of trading it right here, but we'll take a look. All right, so if there are no other questions on Aussie dollar, again, levels are pretty clear, and they're unchanged from last night. Here's what it looked like. Last night. All right, next up on tap from Aussie dollar was Aussie Swiss. So Aussie Swiss and Aussie Yen, I'd put those, basically in the same boat. They both set up the weekly opening range just below key 618 retracement right here at 72.63 on Aussie Swiss. Here's what the chart looks like on the daily chart. First, there's that key 618, 72.64, basic trendline support turned resistance. And again, look at this on a closed basis. If we bring it into a line chart, you can see clear-cut resistance right along that former support line. So again, shifts the near-term focus against that weekly opening range taking shape just below. Here's what it looks like. So if you guys remember, this was highlighted last week in the scalp report, in the intraday trading report rather as well. We were looking at this formation. We start off the week highlighting this, break to the downside, probed right back into that key 618, and there's the push lower. So at this point, you have the weekly opening range taking shape just below resistance. Gives us a much, much clearer, or it makes it much more easier, let's say, heading into the end of the week. If you get a topside break, that's obviously your bearish invalidation level. You look to play those topside subsequent targets right up into 73 handle, which would complete a basic 236 of the decline. 73.70 would be the next topside target. You're looking for about 34 pips per scalp. If you break the lows here, I'm still going to be super careful because you got this pivot to contend with at 71.40 into 71.60. And this is really what would give us a more confirmed, a more conviction near-term short bias, targeting the lower median line parallel. All right. So all we're doing here is we're breaking an embedded formation within the confines of this larger formation. And even if we do get this breakdown, inevitably we'd be looking for long triggers along this trend line. But as it stands, you got the weekly opening range right below that 618. Question, is Swissy more quote-unquote tradable now without the peg? I've been staying clear of it forever, but I see that the pairs you've been pointing out, any extra background to watch Swissy now? So Eileen, after the just January 15th debacle last year, yeah, I was a big advocate of staying off of any Swissy trades. You need a lot of time to kind of let the air clear from that massive, massive move. That was the largest move we've seen in FX history, guys. Okay, not likely something we'll see in our lifetime again, at least not to that magnitude. So it is coming into focus, and like I say, if whatever the asset is, guys, once price action starts to give us clear technical moves, it starts to follow some gradual technical formation. We see some consolidation and a break. Basically, we need some back and forth to really let the trade kind of get back into focus. So yeah, I would say I would. It's not on the ousted list, Eileen. I'm not really still a big fan of trading dollar Swiss, although Jamie's loving it. But that's, I don't necessarily look at the post peg at this point as something anymore. We just scan over it just as we do all the other trades. Okay, with the Swiss, I'll keep it in my sights. Cheers. So it's pretty much the same setup here on Aussie Swiss as it is on Aussie Yen. And here's what Aussie Yen looks like. Again, there's the 618, 86.27. We highlighted this early in the week. This looks like it's already made a break of the initial weekly opening range. Now, it's not a very clean break, and typically when you clear the opening range lows, you want to see some more continuation, follow through, let's call it. But it's the same risk here on the Aussie Yen. Okay, we're still in the confines of this formation. Even if you do get the break, inevitably you'll be looking to buy that pullback as it stands right now. Risk is for a move lower while sub 85.46. That's a 2015 low week close. So let me just highlight that here as the near-term bearish invalidation. And a downside move at this point, you're looking to target that former 618 extension, lower median line parallel, around 84, 84.12. So you're looking for short triggers. You're looking for rallies to sell in Aussie Yen sub 85.47 at this point. Questions on this pair? To be honest with you guys, I haven't taken too much positions on this personally either. Again, I think Euro Oz has the widest ATR of all the Aussie crosses we've been covering, and on the back of last night, which in my mind kind of was a given that you won't see the Aussie rally on a central bank that's saying there's more room for easing. So it's kind of like a no-brainer. Hey, Craig says, sorry to be late, Mike. Have you covered the CAD yet? I'm looking for a short trigger against the weekly high. No, we haven't, Craig. Jot that down. We'll definitely take a look at dollar CAD. Any questions before we move off on Aussie Yen? All right. So those were the 4 trades that were highlighted on yesterday's scalp or intraday chart update. We're still focused on the Aussie pairs as sort of my major play for the week. And we'll be looking for the event risk to really culminate on Friday. Don't forget, we still get non-farm payrolls this Friday. Really, on the back of what we've been seeing, the risk is if we continue to see super strong NFPs, that you'll start to see those interest rate expectations, which have recently been getting kicked out, maybe even brought forward some. If unemployment drops into 4.9, 4.8%, all these things, no matter what's happening with the global central banks, is going to make it very difficult um, for the Fed to justify holding off on the next subsequent rate hike. So we'll see that data hit the wires on Friday. Okay, we made good time. So let's jump into some of the pairs that you guys want to touch on. I see Sterling here for Minho. We'll take a look at or Mustafa. We'll take a look at the Sterling. And I do want to talk about Euro Sterling because that has a very clean weekly opening range as well. So here's what the British pound looks like. And just as a disclaimer, before we jump in, I haven't really been following pound action too closely. This is not the environment that I'll typically perform best in when you get these consolidation ranges that are not really at a major support or at a major resistance. Now, what I'm liking about this recent snapback is that now you're testing again the operative median line for the formation that we've been looking at since last year's highs. So if this formation is in play, look at this on a closed basis, guys. Doesn't get much closer than that as resistance. So it's make it or break it on this rally here for the Sterling. If we're going to hold this, or if we're going to continue lower, you sort of need to see this hold right now. Is there any? Sorry, guys, a little bit of lag here. Just want to see if this, yeah, not bad. Okay. So Mustafa, for what it's worth, here's what I'll just be looking at. This completes a 2618 extension from the decline off the highs. I'm not really going to stress that. My major focus on the near term, or what I would be looking at, is this upward slope off the lows. And you can see that former slope. Here's that same slope that you're looking at on the daily chart. Both of them converge right below 145. So for me, that's sort of what I've just been looking at with the Sterling to see if we make a break above that or not. The weekly opening ranges have not offered any really helpful plays in the Sterling over the last couple of weeks. So watch this resistance here. And if it does give out, at that point, you'd feel a little bit more comfortable working with some sort of retracement. Maybe initially just off that December high. And if you tack that on, it gives you a basic 38.2 at 145.20, 50% at 46.60. So I don't want to leave that on there now. It's going to make it too messy, but you get the picture, right? You're at resistance right now. So if it's going to make a break, this is sort of the area you need to see cleared for further continued Sterling strength. Other than that, the long bias is at risk down here. So keep that in mind. On sterling dollar, why did you decide to start your fib from the December high rather than earlier? So Eileen, when we don't have confirmation, great question. If we don't have clear-cut conviction that this is a low, you're going to want to take your fib from the most recent significant high of this last leg. If this was a low that I had a lot more conviction on, the monthly opening range broke to the upside, we had an RSI divergence into a trigger break, it's a major support level or major key 618 fib, yeah. In that sort of case, I'll want to take a retracement right off the high and see where the first 236 comes in. But when I'm just testing the waters, it looks like it's turning. We're at resistance. A break above here would give us confirmation of a near-term low. I want to take just the most recent leg down, just the most recent significant high, and that would be the high that you made for December. It's a monthly high, and it's the most recent leg of this decline. Does that make sense, Eileen? Now, as we start traveling through it, let's say it sails through my 38.2 and it kind of doesn't respect it at all. All right, at that point, maybe I'll pull the retracement to the next high, or next significant high, and see if that 236 or 38.2 initial level will offer some resistance. So sometimes you got to finesse it a little bit, but for me, it's all about how much conviction I have on this being a concrete low. So I hope that helps, Eileen. Says, okay, thanks. You're more than welcome. So, Mustafa, take it for what it's worth. That's what I'm looking at with the British pound. Again, I think we get some clear-cut moves on the pound crosses once we find a kind of clear this range that we've been trading in. But until then, sort of on the radar just for me at this point. So now that we've looked at what the pound is doing, what I've been looking at is euro pound, and that's another one that we talked about last week. That's seemingly still holding this formation pretty well. So you're basically checking channel support. Last night I saw this thing drop into this thing. And I was really just, I'm kicking myself now. I was really tempted just to take a long, just based on a really beautiful risk reward. The thing came right into 75.40. The low that you made here was 75.25. And again, they're sterling pips. So although it has a smaller ATR, you're working with a little bit more of a hefty value per pip. So just keep that in mind. But what I want to show you here for the euro pound is essentially what this thing is doing at this point is simply setting up the opening range between 75.42 and like 76.16, let's call it. Here's what the 30-minute looks like. The key support at 75.42, 75.50, we highlighted that last week. By the way, last week's opening range never gave out. We were at the same exact setup last week. Here we opened the week, tested that key support, came just shy of that 618, and that's all we've been doing since. Again, checking that key support. And now, again, your weekly opening range, right around 76.17, I'm going to call it, 75.40. You're looking for a break of this range. Now, if the sterling dollar breaks that resistance we just talked about, guys, I'd be looking for a break below key support. And that would give us an opportunity to start, selling rallies in sterling or in euro pound rather for a near-term pullback. I know we've gotten that already, again, on the broader picture of what the euro pound's been doing, but that's not withheld major key support, major key support. If we breach the highs, I wouldn't necessarily want to play the long side until we clear that upper median line parallel, but just to keep that in focus as a scenario which could pan out. So again, just on the radar, nothing to really write home about just yet. I really just wanted to highlight the weekly opening range above support. These tend to be our most clear-cut conviction trades, especially when the opening range low or the opening range high takes place at key support or key resistance. Can you drill down again on the, I think you mean euro pound, to point out where the triggers would have been? Seems like the recent triggers from this morning. On a 5-minute chart? Or are you talking about right here on the 30? Smaller time frame too, sure. Here's the 5-minute looks like. And here's the entire week so far. Yeah, Eileen, I don't really have many triggers here that would have been, super sexy to me at least. Maybe this resistance trigger probably would have been the best one to play. But even then, your session low for Tokyo was quite a ways away from where you are. Remember, you're only looking for about 25 pips per scalp on this, so you really need to pick your entries a little bit more meticulous nature. Session low from London, that would have been your best one, Eileen. That would have been your best one. Because then you have real clear cut. See, and you're getting the hang of it, Eileen. This is exactly what you're looking for, because now your stop is against the Tokyo low, 75.50, 75.60. It's giving you 10 pip stop. So by the time the trigger gives out, yeah, would have given you basically a 15, 20 pip stop. Looking for about 25 pips, you'd be right around there at this point. So yeah, that would have been an operable trade I would have liked. Specifically also, Eileen, why this is a good one is, remember, when you're looking for these triggers, you want to still see preserved the type of swings that we expect. And what I mean by that is if the market is we're looking to play the long side, then yeah, we want to see that thing not spend too much time below 40. If we're looking to play the short side, I don't want to see too much time spent above 60. And certainly on this reversal here, breaking the trigger after failing to really push sub 40, that would have been a trigger I would have liked with a nice risk to reward. So absolutely. Absolutely. Does that make sense? Okay, I see it. Really helpful. Cheers. Good questions. Good questions. All right, so that's euro pound. Moving right along, dollar CAD. Who was that? It was for Craig. Here's what dollar CAD looks like, and certainly we're going to take a look at crude prices as well. That's breaking a big support if it does close there today. But here's what dollar CAD looks like on the daily first. So remember yesterday we were talking about in the webinar on daily FX is 39.70, 39.80 region of support. Interesting thing is we actually closed below it yesterday. The close was right at 39.44, so a solid close below it. Here we are, right, rebounding, taking us right through. So it could be a false scenario type deal. Momentum looks like it's coming back above 50. Again, remember, any oscillator is only based on the close price, so we really won't be able to make this assumption until we see this candle close today. But long story short, not surprised if we see a little bit of a rebound here near term. Here's what the scalp looks like. It's ugly, but it's here nonetheless. I just want to show you another one where you're getting a really clean weekly opening range. We're testing the opening range high right now, right above support at the 88.6 retracement of the entire ascent off that low. And again, 88.6 is sort of one of those masked fibs, basically square root of 786. So you're basically looking for a basic weekly opening range break. If this is a breach of the channel, you look for a little bit more recovery to the upside before taking another stab at the short. Craig, you're looking for short triggers against the weekly highs. So this is a trigger I was looking at heading into the start of the week. Didn't really give us much follow through. I guess you could look at that, something like that on the 30-minute. Let me see what the 5 looks like. Okay. So look, the only thing I would want to say to you is this. You could probably get a scalp off the high if you get a decent break here below 70 on the 5-minute chart. Remember, I'm never going to really advocate trying to sell something that's in overbought condition just because it can stay up here for an indefinite time period. That can really mess with you. So just make sure we follow and stay objective with the rules. Once we cross back below 70, if you don't catch it there, wait for another rally, and then you look to sell that subsequent rally against the high. For me, I just don't want to necessarily jump on this just yet because we are seeing the dollar, again, show some strength, right? Is that 5-minute chart? Oops. Sorry, guys. Oh, here it is. You're seeing the dollar show some strength here with this rebound off the median line. So just use some caution here. You have major event risk on tap on Friday. And not only that, guys, Friday's going to be a double whammy for the dollar CAD. Don't forget, you get non-farm payrolls from the United States and the Canadian employment report at the same time. So those can be certainly really super volatile times for the dollar CAD. So just a word of caution there, but for the 30 here, and there's that 5. So you're not going to have a decent short trigger here per se, but one thing I do want to note that is working in that favor is you are getting some near-term divergence. Price action higher high, higher high, higher high, higher high, a series of lower highs. Now remember, the farther these divergence points are from 50, typically the weaker the signal. So if you come back with another divergent point down here and the other point is up there, that would be sort of a much stronger condition of exhaustion. As long as this holds 60 as support here, just watch out. Doesn't look like it's out just yet, but the first area of resistance you'd start to look at if we do mount the weekly high, which it looks like we're pushing, is going to be right there at 41.46. Craig, does that make sense? Hope that helps on that front for dollar CAD. While we're on the topic of dollar CAD, really quick, here's what crude prices look like. And that's making a run at the lows. Craig says, yes, thanks a lot. You're more than welcome. Here's the other thing I'm looking at right here, right? So this would be bearish CAD if we're breaking this. And this is why I'm a little bit hesitant in trying to fight the dollar CAD rally today. Because of this, I mean, this is the last ditch effort here, but let's break that 618, which it looks like it's doing right now. You're likely to see a lot more losses here for crude prices. Guys, this thing reversed right at a key resistance threshold. We were watching this last week. If you were here in the webinars, you know we were talking about 34.23, 34.40, specifically on a closed basis as being major key resistance for crude. He spent a couple of days up there trying that before failing. But this confluence region at the 50, right, just sub 31 was sort of where we needed to hold if we're going to get a little bit more recovery higher. That being said, this completed a basic 1, 2, 3 ABC simple correction, 2 equal legs up. If we make it back below 30 today, you'd look for resumption of the broader downtrend. Downside targets, the low day close, 28.26. And a longer day, 2618 takes you down into 2674, 2650. So something to watch here as you look at the dollar CAD as well, specifically if we do break that weekly high. Might give you a nice indication. Specifically, if you see crude continue to go, I might not want to fight this rebound. All right, Craig. So that is dollar CAD. Again, quick reminder, Friday's double whammy reports on dollar and CAD. Gary says, I hate the dollar yen, the abomination. I will conquer this thing. Your opinion is much needed. Thanks. I'm short below 121.80. You're asking. Just be careful with this. I will conquer this pair mentality. I've been there before. And trust me, I didn't conquer it. It conquered me pretty well. And it was on dollar yen back in the day. So I get scared when I hear people say that. Look, I do like where it turned. Resumption of the broader downtrend, I don't think so yet. This is what I want to say. Basically, where it reversed was the only thing of importance that I was looking at. See this trend line support, 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 break. We just tagged it as resistance. Also, what's up there? Hey, 200-day moving average, right? 21.46. That's cool. If we make it below the 100 today on the close, and again, there's a sliding parallel of the same slope that you see here off of that August low. If you take that same slope, or that initial slope was derived off this low from 2012, looks like that's offering some near-term support right now. So let's do this. Bear with me 1 second here, Gary. Let me just do some finagling here with the levels. That 618 obviously hasn't offered any help or assistance at this point, so we're going to get rid of it. Momentum holding just at 60. You saw that last rally hold right there as well. See what the near-term chart looks like. Yeah, the first probe sub 40 this week. And on this rally, you're seeing resistance at 60, at 50 rather. Looks pretty good for a near-term turnaround. Now, Gary, I can't ever advocate taking a short at the weekly low, even from a scalping standpoint. Just doesn't make much sense. So we want to make sure that either one of two things happens. Either this gives us a decent rally near term, resistance hold at 60, and you take a stop against the weekly high that allows you to stay within 30 pips. Or if you see the downside break, look for a rebound to check former support as resistance, and at that point, we'll look to initiate a short scalp with more of a conviction bias. But from right here, I really can't advocate trying to short, even on a break if you get a trigger break, because you have a lot of support not too far off. Just lower, you have that near-term pivot at 120.22, but more importantly, that 1980, 119.88 level coincides very nicely with channel support over the next few hours. So you're kind of really in a tight range here for a dollar yen near term. Gary, does that make sense? He says finagling, a new technical term. I love it. Well, it's the abomination, man. You got to come up with as many different ideas that you can, because it's a trickster. No, I do like where we turned. I just don't know if I would play the pullback from here. I still think this thing could make an easy another tag of that key resistance. This was a huge pivot for months and months and months. So it would also be a firm tag of that former support level, and this is the level that was tagged, 4 times here before it broke. Maybe another test of that confluence resistance before we move off. And one other thing I just want to take a look at, guys, is that extension giving us anything important we should be looking at? No. Remember that shocking move from the BOJ? They really caught everyone off guard, prompting a lot of this yen weakness. But Gary, feel free to take a picture of that chart if you need it. So guys, as a quick reminder for anyone who's new to the room, you can always take a quick snapshot of any of the charts that you see presented by clicking on that camera button in the top right-hand corner of your GoToWebinar screen if you need them for future reference. Okay, dollar CAD and sterling crude we covered. Gold, just a quick note on gold. Here's what gold's doing. It's basically testing a break of the resistance that we talked about yesterday. Oh, here's what the gold chart looks like. 200-day moving average right at 1130, 1131, just shy of 1131. It's sort of what you want to watch out for as resistance near term. And I do want to point out, okay, the divergence that you're seeing so far in momentum. Even if we close where we are right now, that would still be a divergent signal. Price of action making a higher close, the oscillator making a lower close. This is your trigger, and you know when to start playing a short side. Even if you do get it, you only are looking to play the pullback. The broader trade still remains constructive while we're in this formation. It's funny because gold's been surprising a lot of people. And even on days where the dollar is still a bit strong, you're seeing gold hold its footing rather well. So catching some attention. All those perma bears, not so perma bear ish anymore at this point. But certainly, I'm a little bit cautious of the long side from here. So if you're looking to initiate any new trades on this, I'd still be looking for a decent pullback. At its face value, again, guys, very, very basic. Monthly, January opening range takes shape into 1112. You come back to test the lows, fail to even test the low, and then you break right through the highs. Come back, test the highs as support, holds, and move right off. So on its face value, I still want to stay constructive above those highs, but near term, you do have that 200-day moving average to contend with, and just beyond that, the key 618 at 1135. So I'd rather be looking for a play rebound off of these levels or on a pullback area to get back on the long side. Okay. One last Aussie pair we didn't cover. I have it just running notes here real quick. Aussie Kiwi. I know that Jamie's been looking at the same pair. All I want to know, guys, is that resistance region that we've been talking about from last week, that 109, was it 109.10, 109.35 area? The reversal off this might have more to go. And in fact, I just wanted to highlight this as well. On this rally, that's one of the cleanest rebounds off of 60 that I've seen. Okay, oversold sub 40. There's 60 last time we saw it in November. Oversold reading, here's 60 again. So what does that mean? On an Aussie Kiwi break in momentum and close above 60, and a price close above 109.35 is what would be needed to really shift the focus towards that next target, and that would be 110.67. As long as we're below this near term, you're risking a pullback towards the lower median line parallel first. And I just wanted to highlight that. There's also a basic trendline support off the low. And you have 200-day moving average right there as well. So the only focus for me on Aussie Kiwi heading into the remainder of the week is either a break sub 108.30, 108.11, or a breach above 109.35. Okay, this is sort of your 100 pip range that you need to see cleared. Now again, on a topside stretch, you're looking right for those close highs from November, the 618 extension, slope resistance, former slope report support, all line up right up here. So the levels are pretty clear. I just want to see if we get another low in place here before you start to reverse to the upside. Here's what the intraday chart looks like. All right. Any cross market with gold and the Aussie? Sure, typically, not right now. You are seeing gold rally alongside the Aussie, but it's not something I would necessarily make as a corollary play at this point, Eileen. But typically, they're very, very, very strongly linked. Gold is one of their major exports, and when in the past, yeah, absolutely, absolutely, and it will tend to influence prices for sure. It's just at this point, I think that the technical advance is very different. When you look at something like the Aussie dollar, and gold, yeah, we could do that. In fact, we could run a corollary play here. Bear with me one moment. Bear with me 1 second, guys. So here's what the corollary play is, Eileen. Got me interested to see what it looks like right now. Here's what it looks like right now. So this is the correlation of gold that you see here in orange, I guess that is. I guess that's their attempt of being gold. And there's the Aussie dollar. So you can see that over the last, specifically month or so, yeah, you've seen them start to move together again. But you've seen that decouple really for the majority of last year. They weren't really, it wasn't very, really strong of a correlation. It's starting to pick up again, but it's nothing I would necessarily put emphasis on at this point. Does that make sense? Take them each on their own merits until we get a little bit more of an important play there. All right, guys. So if there are no other questions, what do you think would make the correlation Aussie stopped exporting gold? Not necessarily, Eileen. It's really what the market themes are looking at. Typically, when you're in a real strong risk-on, risk-off environment, that's when you'll see that correlation the strongest, because as markets sell off, people automatically rush into the relative perceived safety of gold and relative perceived safety of the reserve currency, which is the dollar. Those really strong risk-off environments are really when you see those correlations start to tighten up even more. If there are much more widespread global concerns about growth, also you'll tend to see those start to move in tandem. Major exporter, lower gold prices, specifically the more heavy it'll weigh on the Australian economy. So it's really when the market sentiment is at extremes, Eileen, that those correlations I've seen in my career at least be the strongest. It's just not there quite yet. Not there quite yet. Different question with crude and CAD. I think that's a little bit more of a stronger correlation near term right now, just because the oil decline, the oil sell-off has been in the headlines. It's been that everyone's talking about. One of the major themes of the year so far has been this drop-off in crude. And when that comes to the limelight, yeah, the crude exporters will tend to get the attention will shift on them right now. Gold is sort of doing its own thing where it's not in the major headlines. You're not seeing gold charts all over the place and people telling you, um, about something radical happening in gold. So sentiment is just not quite there yet. But guys, if there are no other questions, we will go ahead and wrap it up here. It's been kind of quiet, I know, on some of the other crosses. It's slim pickings throughout the course of the day. Stay focused on what's moving and stay focused on what has given us, at least over the last couple of days, the most plays. And I think that's the Aussie cross is what I've been focused on as far as the intraday trading is concerned. So we'll pick things up. Don't forget, you do have some data today. ISM employment comes at 9:45, or ISM read here in the United States, New York ISM. But we'll be looking for the ADP numbers, which are on tap tomorrow. ADP, we're looking for a print of 193,000 for the month of January. That's down from 257 the previous month. And ISM non-manufacturing component, both of those hit tomorrow. So we'll cover those right on the onset and open of the webinar. Till then, guys, best of luck trading, and we will see you tomorrow. Cheers.